Hi, everyone. Welcome to the Timing Research Show for May 23rd, 2016. Today we will be talking about the 139th weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. I have Dave Landry back to host this week, so I'm going to go ahead and turn it over to him.
All right. Thank you, David Cosman. Thank you to TimingResearch.com for having me back once again. Looks like we have a pretty good lineup this week. I think everybody has been here before. Eric, have you been here before, but maybe I wasn't hosting?
Yeah, I've been here before, but you weren't hosting.
All right, so you know the routine then. Okay, we're not going to beat you up too bad. Don't worry about that. Well, since we have you, go ahead. Tell us a little bit about yourself and tell us a little bit about your trading and ProTraderStrategies.com.
Well, my name is Eric Wilkinson. Thank you for the introduction. I've traded on the floor of the Chicago Board of Trade for almost 20 years, and I was specifically in Fed Fund futures, which is the interest rate everybody talks about these days, but in the day it wasn't that popular until Greenspan. And I've traded options and futures on just about all of the products out there. And I specifically have geared myself towards the equities now, and with Pro Trader Strategies, I do an options education series basically, and on Fridays we do webinars on different option strategies that people can implement into their portfolios. So I am more along the lines of selling options to collect a premium, so I talk mostly about that. With the low implied volatility we've seen lately, I'm starting to gear a lot of the strategies towards buying some options or ways to take advantage of low implied volatility and reduce your cost basis for the most part on those strategies. So you can go to ProTraderStrategies.com and check that out if you would. Cool. And I also have I'm on Twitter at Wolfman's Blog.
Okay, cool. A lot of moving parts with options, so good to have somebody out there who knows what they're doing. All right, Sam, let's go to you next. Sam Bourgi of TradingGods.net. Tell us a little bit about your trading and tell us a little bit about TradingGods.net.
Sure. It's great to be on again.
Great to have you, Sam.
Great. Last time you weren't on, Dave, so it's been a while since I've done. But yeah, I mean, my background is in economics and policy. I started off as a researcher working for the technology sector. Also worked as well for the government and industry, looking at mostly things like economic growth and development and various parts of the world. I kind of came into the financial markets in that respect as a researcher, and ever since then I've been mostly focusing on equities as well as on the VIX volatility index, and that's really where the main driver of the TradingGods.net is. Our goal is to help traders better identify and trade volatility as an asset. So I'm constantly developing new articles, training modules, and weekly webinars dedicated to trading the VIX ETNs and helping traders better navigate volatility with respect to the S&P 500. So great to be here, and looking forward to the discussion.
All right, fantastic. All right, Roy, let's go to you next. Another veteran of the show, Roy Swanson of SteadyTrader.com. You know the routine. Tell us a little bit about your trading and a little bit about SteadyTrader.com.
Sure. Hi, Dave.
Right.
I've been trading since the 90s, early 90s, and done a fair bit of consulting for a number of trading strategy providers over the years. Went out on my own a couple of years ago with SteadyTrader.com because after about a couple decades of trading, came to the point of view that really want to focus on very short-term trend trading, just get in, get out, play it safe, and take your money while it's real. So we focus on 1 to 5 day trades. Not quite day trading, but a little bit tighter than traditional swing trading, I would say.
Cool. Okay, let's go to you next. Neil, you know the routine. Tell us about yourself and a little bit about your trading and TradeReview.com.
Sure. I use two unique and figure, which I've heard a lot of people in Chicago use, I've been told, in the 80s and 90s, and I use the Ichimoku Cloud as well. I put them together. I trade everything. I'll do equities, and you can trade oil with the ETFs now, the dollar index with the ETFs, pretty much anything you want, just not doing the actual Forex pairs. And I write commentary 5 days a week and send out tight portfolio picks to my clients.
Cool. I'm Dave Landry of DaveLandry.com. For those of you who don't know me, I believe that you could only predict the short term when it comes to markets, but you can stick around longer term if the position moves in your favor. So I take a bit of a hybrid approach to my money and position management. I'm slotted as a swing trader, but I think you can stay with a trade as long as it moves in your favor. So we do a little bit of a swing trading to kind of get the short-term profit, and then we hang on longer term. People often ask me if my money management is psychological or statistical, and my answer is yes. You're looking for that instant gratification, that short-term gain, but you're also looking for something much bigger in the longer-term trend. And I believe that's where the real money is. Unfortunately, that's where the risk is in longer-term trading, so that's why I take a hybrid approach. I have a 21-page report that's available on my website DaveLandry.com, and I have a lot of content there. I have over 500 posts last time I counted. I think links to about 1,600 YouTube videos, so there's a lot of good stuff there, and you can get started for free if you want to. All right, let's go back to you, Eric. First question this week is, based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower by Friday's close?
This is a great question, and I probably should do counterintuitive to what I usually talk about, because I usually say it's going down and have been wrong the last couple of times I've been on, so I probably should go against the grain and debunk myself and say something different. But I think that we're going to kind of trend sideways, actually, to lower. I think we're going to go down here, and are you guys being able to see my screen, or is it on the... Let me see.
Yeah, that's great. Well, it did look good.
Oh, did I have it on there? Sorry.
Yeah, you had it.
So here, I look at the market profile here, and it basically gives a psychology of the market. I mean, I like the candlesticks, but this gives you a real good breakdown as where people are putting their money where their mouth is. This line right here in the sand is where the volume has been traded. This yellow area is really where the time has been spent. So the idea here is the market's going to want to migrate towards these magnets, if you will. But I see this also wanting to break down and test this 2007 level and kind of start filling in these lulls. And what it will eventually do is create a nice big bell curve here. And that's the idea of it. So I've been talking about it wanting to trend down for quite some time. And I think it's going to trend down and at least test this 200 or 2007 area. Whether or not it happens this week, I'm not as sure on that. But I'm longer-term trend for the next month or so. So that's where I look for it to trend to. In the next week, I think it could easily come down here and test this 20 area right here, which would be the low. Since we broke that on Thursday, it's just trending nicely down, and that's where I see it going, at least in the next month or so. By Friday, I would have to say I'm about a 60 delta on it being lower on the week.
Okay. When you have a big sideways trading range, like you pointed out, do you, as that gets bigger and bigger, or the horizontal line, I guess is what I'm looking at, gets bigger, does that often indicate that the market's getting ready to break one way or the other, in your experience, or does it just mean it's an area of support?
Yes, on both fronts. It is an area of support. You could easily see it come down there and test off of these lows, but eventually, you know, the trend is your friend, and we've seen this trend go down. Although we've seen massive market moves lately as this goes down, I think that that's really the battle of the bulls and the bears going on, and I think that the bulls are getting tired, as you can see, as it just continues to trend down. We're making lower lows and lower highs, and that's just you know, atypical of the downtrend, you know, ensuing. So I'm short the overall market. So you know, that's where I'm standing.
Cool. Okay, Sam, let's go to you. Same question. Based on any technical fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower by Friday? Easy for me to say.
Yeah, it's been a bit of a crapshoot trying to predict this lately. I mean, based on what I'm seeing with respect to the volatility index, I think that we're going to be heading a little bit lower this week. I'm about 60% sure. I mean, volatility is still well below the historical average right now as we speak, but it has crept up quite a bit over the past month. We're up around 15% on the VIX, really, since over the past 4 weeks. So that's kind of the one main indicator that I'm slowly tracking, and volatility is actually up a little bit early this morning. Also, I'm keeping a close eye out on the economic data this week because, as we all saw last week, all of a sudden expectations about a rate hike next month have risen. So the Fed funds futures rate is now at 30% likelihood of a rate rise next week. So I think that if investors are still speculating about a rate hike next week or next month, that can influence the direction of the markets over the next 5 days. So I'm about a 55 to 60% chance, certain that we're going to be heading lower this week.
Okay. All right, Roy, same question to you.
Yeah, I'm going to say lower. Basically, I'm a price action guy. I've got a little formula I use to identify short-term trends. I'm totally with you, Dave, about only being able to predict the short term, but we saw our overall market conditions indicator drop significantly over the last 7 days, I would say, and it dropped again on Sunday. So I'm seeing the end of the week being lower.
Okay. All right, Neil, let's go to you. Up or down, and what percent is correct?
Yeah, I'm going to say a little bit higher, maybe 20 points on the S&P. I don't know if my chart shows up. Is the chart showing up?
Not yet.
Oh, okay. Just a second. Now it's just showing up.
Yeah, you got it now.
Yeah, this is just the S&P 500 on a daily cloud chart, and you can see here this hammer candle right at the top of the cloud. Cloud is really effective, but basically, we're not going to get above 2100. I mean, that's really, really pushing it for months and months into the future. So, if we're either going to get a bounce up here a little bit, if not, we're going to filter into this cloud down to 2000 or so. But I think we can get a little bit of a bounce here, and to be honest, I think. When some news is starting to come out now that Trump is most likely, I mean, I think he's going to win the election. I don't possibly see any other outcome. But he's down 7 points. Now he's up 2 points. I mean, this is going to give, for sure, a short-term boost to the market. Everyone knows Trump will, at least the perception is that he'll be good for the market, and that's all that matters for stocks in the short term is the perception. So you're going to see some news of Trump coming out, and he's going to win the election, et cetera, et cetera. Wall Street will get a short-term boost, as well as the shrug off for the interest rates with news saying that maybe the interest rate hike is good because it shows confidence in the economy. So if the economy's good, stocks go up. But a little bit up this week, and next week is a bit of a crapshoot now. I don't know if I'm going to go up this week.
All right, cool. You have a percentage on that, Neil?
70%.
70%. Good job. All right. Well, I'm going to go ahead and predict down, and I'm waiting for some charts to actually load here. I didn't realize the data was missing, but on this machine. We had a sell signal last summer, and it's a bow tie weekly sell signal, and there we go. It's simply just when three moving averages come together and begin to spread out over or after an all-time high, or at least a decade high or multi-year high at the least. And last few times this has happened, and I'm waiting on charts to come up, the market has had significant sell-offs. So it's a little bit of a bigger picture type of pattern. Let's go ahead and get to, let's see, here we go. Let's see if we're going to get caught up. All right, there we go. Now, that's the S&P 500. We'll take a look at it weekly. And this is a 10-day simple, a 20-day exponential, and a 30-day exponential. And when they come together, begin to spread out again, usually it signifies a major change in trend. Now, you may notice that they've turned back up, but this is a minor signal down here. Major signals come off of all-time highs or at least multi-year lows. This was a 13-year low here. This was, I think, about a 10-year low back at 2000. And the last few times you can see in 2003, I'm sorry, that was your buy. Your sell was right here in 2000. And we've had some pretty significant drops. And this occurs in all markets, also occurs in all time frames. Obviously, not every signal works, but as my friend Greg Morris says, you need to treat each signal as it will become the big one. So I think we're still into that major signal, and so I'm going to stay cautious as long as we're there. The other thing, too, is I believe that a market should continue to make forward progress, and we really haven't made a whole lot of forward progress in the S&P 500 in a long, long time. And if you take a look at, like, the Russell, I don't want to spend too much time, but take a look at, like, the Russell, you can go all the way back to 2013. We're trading right around those areas. The S&P 500, you go back to about 2014. So I think this is all concerning. I think the market has to continue to make forward progress. I also think a lot of people have begun to drink the Kool-Aid since 2009, again, thinking that the market only goes up longer term. So I'm going to stay cautious regarding the overall market. Doesn't mean that we haven't had buy signals in oil and oil stocks and commodities and things like that. But overall, I'm not going to rush out and buy a bunch of stocks right now. So I'm going to say down, and I'll give myself a confidence of about 60%. Technically, I guess I should be saying up this week because it's a holiday week and there is a little bit of a seasonal bias going into Memorial Day. But I just think right now we need to stick on the side of being extra cautious when it comes to this market. Eric, let's go back to you. Next question is based on your answer to number one, which was the up or down. What specific reasons you think the S&P will be headed higher or lower this coming week? I can't hear him. Can anybody hear him?
Hey, Eric.
There you are.
Eric, I had to mute you. Your mic was picking up some noise. So okay, looks like you're on mute.
How are we doing now?
Sounds good.
Okay.
And that concludes the secret of trading.
Yeah. Not very computer savvy. Anyway, so I want to go. I'm going to the downside. You know, we had the flash PMI numbers, the Purchasing Managers Index, are forward-looking in regards to they're the purchasing managers being surveyed as to what they think the overall economy is doing. So I think we got a perfect storm here. We're seeing that we've gotten the lowest reading since October of 2009. We've got a Fed saying that they're going to continue to raise rates for what reason I'm not really sure of. They think that there's inflation out there. Other than oil prices and precious metals, there's really no inflationary factors out there, or no commodities really moving higher in my eyes. I mean, but that flash PMI number was pretty disparaging for the economic front. And then if you have the Fed raising rates in this kind of environment, it's really not going to be good for the economy. So as long as the Fed continues to say they're going to raise rates, that's going to be bearish to the economy unless they start turning around and having some talks of holding off on that. I don't see any reason why the equities aren't going to continue to throw a tantrum when the Fed heads speak. So I'm going to say down on this.
Are you looking at the dollar at all? As part of
I have been looking at the dollar, and that's going to kind of weigh in on my talk about. I have some trades later on in the show that I was going to talk about with the dollar strengthening. I see the dollar overall strengthening against other global currencies, and that's going to put downward pressure on the precious metals, oil, along with Iran continuing to crank out as much as they can.
Okay, cool. All right, Sam, let's go to you. Based on your answer to number one, what specific reasons you think the S&P will be headed higher or lower this week?
Yeah, I think that there's I mean, right now it's all about perceptions about interest rates, and I think that this week the economic data is going to be really important. So they're forecasting a upward revision to first quarter GDP on Friday, I believe. So economists are expecting a revision up to 0.9% year over year, which of course is still very, very low. But I think given the fact that the FOMC minutes last week indicated that, you know, policymakers are at least considering raising rates as early as next month, that's going to feed into some of the rate hike jitters that we saw last week. So that's really the one area that I'm going to be looking at. Also, the U.S. dollar, as you mentioned, the dollar index has actually rebounded about 3% since the start of May, and all of a sudden everybody's bullish on the U.S. dollar again. So I think these factors are definitely going to weigh on stocks this week. But I think that, you know, it's going to be a data-driven week in the market, and we have durable goods orders, we have GDP, and we have a bunch of Fed officials that will no doubt add confusion to the market, because that's what they do, and it really does shock the hell out of me how you know, how Fed officials always contradict themselves. You know, you have one of the powerful institutions in the world, and they're not on the same page about, you know, expectations and perceptions. So that's going to add a little fuel to the fire for my expectation that the market's going to pull the wheels.
Well, it's frustrating. Now they think their job is just to try to push the market higher at all costs, as opposed to being fiscally responsible. But I guess that's another conversation for another day. Roy, let's go to you next. Based on your answer to number one, which it was down, I believe. What specific reasons do you think it's going to head lower?
Again, I mean, my reason is basically the price action models I use. I try to stay away from pretending I'm an expert on global geopolitics and everything else. But I mean, there
Amen.
are two other things obviously happening, right? I mean, look, the Fed has basically said, let's be nervous, and as someone just said, tantrum, right? Yeah, I mean, the market's going to throw its tantrum, and we've got this set for a while, and on top of that, you've got sell in May and go away. I mean, it never. It's an old rubric for a reason, and I think it started actually last week. But there's going to be your typical end of May sell-off, I think, on top of everything else. So.
Well, statistically, it's actually selling Jude, but I saw a speech with Tom McClellan, and he said that people tend to believe things more if they rhyme, like if the glove doesn't fit, you must have quit,
Right.
things like that. So it's actually, he did the research, so the timing's a little off on that. It's actually a Jude, but seasonals will, I'm not a big fan. Not, if people trade them, that's fine, but it's not a big fan. Okay, Neil, let's go. Let me mute myself. I'm getting a little feedback.
Yeah, I
same
don't
question, Neil.
believe it either, but it's just out there.
Yeah, I hear you. Neil, let's go over to you.
Same question.
Yeah, I think we're only going to get a small move up this week, 20 points on the S&P 500, and then next week we'll have to see how it goes. But I'm not trading any stocks to the upside at all right now because you're not going to time a tiny little move like that. It's not really worth it if you're going for some serious swing trades. And looking at the charts, that's what I think. We've been sort of going down for. Hold on, I'm just bringing it up. Well, we've been going down for almost 2 weeks now in stocks, so. Sorry, I'm having a little bit my computer's just a little bit slow, so I'm just going to leave it at that.
Okay. I ignore all news, and I'm also a price purist.
I ignore all news, and I'm also.
I'm getting feedback again. I don't know if we could do anything about that, but I'm also a price purist, and I'm just not seeing a whole lot to get excited about because if you look at if you drill down a little bit and look at the S&P 500, we haven't seen any forward progress, at least on a net basis, and it amazes me how important that simple indicator is. Just look at where the market is today, and then look back in time and see where the market was. So we've gone sideways for about 8 weeks. This choppy sideways action has kind of messed up the charts. I'm not seeing a whole lot of exciting momentum stocks out there. I'm seeing a couple of IPOs and speculative issues that wouldn't know a fundamental that hit them in the ass, if it hit them in the ass. And those are my favorite stocks, the stocks that have the least amount of fundamentals. The fundamentals can't muck things up. I was trading an IPO. I forget exactly which one, but I could look back at the records. But it was late last year, and I think they were losing about $3 a share for every 50 bucks. So I don't really care about fundamentals. But I do think, as I said earlier, I think when a market begins to lose forward momentum, I think that's the beginning of a rollover. The other thing that has me really concerned in all these indices, and let me see if I can pull it up real quick, it's especially true in the Russell 2000, which is a nice broad-based index, as you guys know, is the amount of overhead resistance. And an easier way of describing it, I guess, would be to call it supply. S&P 500, obviously, we got a lot of trading back here we'd have to get through to get to new highs. And there's nothing magical about the way I see technical analysis. You're simply trying to read the emotions of others, and then obviously at the same time controlling your own. So let me just show you the Russell real quick. Maybe if we can get a clean chart, or a somewhat clean chart, maybe it'd be a little easier to show you. Let's take a look at like a weekly chart here, and then this is the last thing I just want to bring up. But you can see the Russell, there's just a tremendous amount of trading above where we are now. So anybody who bought somewhere in this range may be inclined to get out of break even. You can see we've already kind of bumped off of it so far. So that has me concerned. And also, anybody who bought stocks over the last couple of years is now beginning to question their investment. So that return of capital sometimes becomes more important than return of capital. So that's why I remain a little bearish in here, and I think that this market has its work cut out for it. Doesn't mean that I won't buy stocks. I'm letting the database right now tell me what to do. So if I see a great looking setup, I'll go after it. But right now, I'm just not seeing a whole lot of good looking setups out there. All right, let's move on to I think we got everybody on the last question. Let's move on to the question of the week. Okay, the question of the week is, since the Iran oil sanctions, what's that, were lifted in January, they have been ramping up productions. Do you think they will eventually negotiate new production limits? What long-term effects do you think this will have on the oil markets? Eric, let's go to you first.
Yeah, the oil sanctions that were lifted against Iran, I mean, I think before the sanctions went into effect, they were had their limits at around 3 million barrels a day. They have since gone and surpassed that. Now, one of their biggest buyers is China, which could, ultimately affect that. But they've gone and superseded that. I don't think that they are going to be in talks with OPEC. If they do show up there, they're gonna kick them to the curb and say, no, we're gonna not only meet what we had before, but now that we've got China buying from us, we're gonna try and recoup some of that lost money that we had seen, so that they can rebuild their infrastructure, whether it's buying bullets or buildings. I don't know, but I don't really see in them cutting off or shutting off the spigot, despite that Russia and Saudi Arabia really want them to come to the table. If they show up, I don't think that they're going to do anything, which was the big thorn in their side before they had the sanctions. So I continue to see oil moving down, like with the dollar strengthening. I mean, we are at capacity beyond what we've seen in quite some time. I mean, there's basically oil tankers sitting out in the ocean just bobbing around because there's no place to really put it. Nobody's willing to take it. So I think that this push higher was when the dollar was weaker a little bit and a little bit of short covering, but I really see it coming down. Again, on this chart, as you can see, the point of control, where the most volume and time has been spent, is down here a little bit lower. So it has extended itself to the upside, tested the value area high. If we get above 50, all bets are off. It's going to look like it's going to go up here and test this 60, because that is the next volume node, if you will. But I see it easily coming down here and testing this value area, the $44 area, relatively soon. So that's the way I see the global.
Yeah, but even if it came, because I'm going to take the flip side of the argument, but even if it came down to that area, would you say that it's still at an uptrend from lows? Looks like it would still be making higher.
It is still an uptrend. I just think it's overpriced for the amount of oil that's out there for us to plow through all of the oil that we have just in tankers and everything else. It's going to take a couple of years. So at some point, these guys are going to have to really offload this, and they're going to start lowering their prices and try and get it moving.
Okay, Sam, let's go to you next.
Yeah, so Iran's deputy minister recently said that they're going to actually increase exports back up to around 2.2 million barrels per day by the summer, and they're currently at around 2 million barrels per day right now. So on that basis, you can expect Iran to continue to ramp up production. I don't think it makes sense for them to come to the table now. I don't think next month's meeting in Vienna is going to really accomplish much. And then you also look at the growing rift between them and Saudi Arabia, and that was essentially what halted the Doha agreement last month, right? Iran refusing to join Saudi Arabia and OPEC on a production freeze. So ultimately, I think that they're going to continue to ramp up production. We're over 3 million barrels right now. We're approaching 3.5 million barrels per day, and I expect that to continue. Overall, I think that the oil market is way overbought right now. I think that when you look at what supported oil prices recently has been supply disruptions in Canada as well as Venezuela and even Nigeria. So that's really propping up the market. Ultimately, though, I don't really see anything north of $60 a barrel anytime soon.
Okay. All right, Roy, you're up next.
Yeah, I mean, I guess I agree with the consensus here. I mean, there's no reason for Iran to start lowering production. There's these are the oil wars, right? I mean, There's no more OPEC. There's no more price stability. They're just everybody's pumping to use oil as a weapon, as an economic weapon, and there's no reason for them to cut back at all.
Okay. All right, Neil. What's your 2 cents on this? Well, while Neil's getting ready to answer, we'll go ahead and Neil, just chime in when you want. I'm going to go ahead and
Neil, you might have to unmute yourself. You were picking up some feedback too.
Let's give Neil a minute, and I'll just I'm a price purist, as I've been saying throughout the show, and kind of an amusing anecdote. When I was speaking maybe 10 years ago, maybe even longer, maybe 15 years ago at Traders Expo once, I was very bearish on the oil energy stocks because they were going lower, and I was showing a lot of stocks in the current portfolio, and I was helping the class pick stocks and showing them what stocks I liked on the short side. And one guy blurted out, he sounded kind of like Henry Kissinger, what about the situation in Nigeria? And I'm like, what about the situation in Nigeria? As a price purist, price was headed lower, so I really wasn't too worried about the situation in Nigeria, nor was I aware of it. If you take a look at USO, this is just what I use as a proxy as an ETF for oil. You can see I was talking earlier about the bow tie. We bow tied here off of multi-year lows. And when you get these bow ties off of major lows like this, you can see one back in 2014, and we had a pretty serious downtrend afterwards. Now we have one that formed earlier this year. I tried to bottom out last year, didn't work, and we got in and out and licked our wounds and moved on. But now we're picked up quite a few nice profits in the underlying oil stocks, and so far the trend is working its way higher. I realize there's a lot of situations around the world, not just Nigeria, that could affect this, obviously, but so far the trend remains up, whether it's just a longer term or intermediate term, I should say dead cat bounce, but for now it looks like I think the sell-off is overdone longer term, and I think over the immediate term the trend remains up. But check back often. We do have stops in place just in case. Okay, Neil, did you get your mic back on, or?
It looks like we lost his camera too, so I'm guessing
it
fell off.
Hopefully he's not in Iran.
One thing I wanted to ask Sam something about, with the news around this oil and everything else, and the oil sands of Canada. I mean, their production was only cut back, and even here in the United States, with some of our rig counts going down, our production is that cutback is superseded by the amount of increase in production for Iran, is it not? I mean, I don't know those numbers as probably intimately as Sam does or somebody else, but isn't that completely being offset by Iran?
Yeah, it's a really good point. I mean, OPEC averaged something like 32.5 million barrels per day in April, which was near a record high, and a lot of it comes down to perception, right? Because the oil sands, actually, the fire up in Fort McMurray cost the production of around 1.5 million barrels per day, some estimates show. So whether those are true or not, but most estimates I've seen are between 1 million and 1.5 million barrels per day of lost production in the oil sands region. So that maybe is playing a role. Also, Venezuela right now is expected to decline. Their exports are expected to decline by around 200,000 barrels per day this year, given their massive economic disaster going on over there. So I still think that we're way oversupplied. And if you look at recent reports by Goldman Sachs, by Barclays, by Morgan Stanley, all the analysts seem to show that, markets can easily drift back lower. Where I guess we're going to have to monitor that and see where it ends up.
Okay, cool. All right, Eric, let's go back to you. Any closing thoughts on anything we said today? Comments, criticisms, complaints, or anything else you want to tell us about ProTraderStrategies.com? Floor's yours.
As for comments and complaints, I got a long list, but we won't go into it.
Well, that's one of the people complain there's not enough controversy on the show. So I mean,
I can complain all day long. Nobody's going to listen to me, or they'll just come up with a reason why not to. But I did want to talk about one of the trades. We talked about the strengthening dollar and where I thought that was going to do with precious metals, things of that nature. I just did a webinar on Friday on this particular strategy, and it is one of my favorites, especially around high volatility, which is hard to find right now. But I went into the GDXJ, which is the gold miner index, and it's kind of gotten real sloppy, as you probably well know, Dave, from a charting standpoint. But
Yeah.
we've tested those highs and gone there. So I did this in the June and did the 36-38 call spread, and I did it as a 1x2. So it's basically a front call ratio spread. So for every 130 or for every 36 call I bought, I sold 2 of the 38 calls to finance that, and I got a 55-cent credit for it. So my risk to the upside is if it goes to $40.50 on the underlying. So that's my break even. So at the end of the day, I really don't see gold going up here and making new highs, especially if the Fed continues to raise rates. And if they don't, I just see with the strengthening dollar, there's going to be some bearish undertones to this. So at the end of the day, if it does rally up to test my 38 calls, I collect the full width of the full width of those strikes plus the 50-cent credit. And if it sells off, like I kind of see it happening, I get that 50-cent credit that I receive. So that's my favorite strategy right now with the markets we've seen. And if it continues to trade sideways, then I'll let the cards fall where they lie.
All right, cool. All right, let's go back to you, Sam. Any closing thoughts or anything you want to tell us about TradingGods.net?
No, that was just an interesting chart there. I mean, I've been following precious metals pretty closely for the past little while, and you look at the gold-silver ratio, you see how silver has outperformed gold by a wide margin over the past, I would say, couple of months. That seems to indicate that there's not much upward momentum left for the yellow metal, so I don't expect prices to continue higher as well. So that was a really good point there by Eric. In terms of Trading Gods, as some of you are aware, we are actively involved in developing webinars and trading tools to help investors access volatility as an asset. So if you're interested in trading volatility, the VIX, the various VIX ETNs, the inverse ETNs, TradingGods.net has all that and more. We currently have a VIX trader program that is essentially your one-stop shop for trading volatility. So we actively invite everyone to check out TradingGods.net to learn more about that.
Cool. All right, Roy, let's go to you. Any closing thoughts? Anything else you want to tell us about SteadyTrader.com? Did we lose Roy? Let's talk about Roy now.
Hey, I'm back. I had the mute on.
All right. No worries.
What happened to your wanting a hot trade of the day?
For Eric or for me?
That was a new thing that the show was doing. But anyway, I'll give you
That
one.
was, that was something that Matt throws in when he hosts. But yeah, if you have a trade you want to share, or if, you or anyone else, you're welcome to. We got time left. So.
Sure. Because we focus on such short-term trades, 1 to 5 days, we're always finding good trades. And we got one in there today. The Andersons, it's up 3.5% already, and I'm sure it's going to go. We'll get 5% on this before the run is over. So anyway, that's what we do. We find moves of about 3 to 6% that happen in 1 to 5 days, and we do it over and over again every day. And if that appeals to you, go to SteadyTrader.com. You can learn all about it. That's how we do it. Pretty simple.
Cool. All right, Neil, let's go to you. Neil of TraderReview.net, or .com now, too. Anything else? So you can tell how long I've been around. Anything else you want to tell us about TraderReview.com?
Not really. Just wanted to give a trading tip to everyone, and that's just to absolutely keep your eye on the U.S. dollar index, because that's affecting so many things around the world, especially commodity stocks. If you want to trade something like Freeport McMoran or U.S. Steel, things like this, you got to really be aware of that dollar index. And if you have price objectives, stops, things like that on any type of commodity stock, and maybe it doesn't quite reach your objective, but it looks like the dollar is going to turn the other way, you got to really take that into account in your trading. That's something I've really been looking at for quite some time now.
Cool. I was unaware that Matt was doing the hot trade. I don't always have setups, and this is actually not set up. This is an IPO. We are long, full disclosure. We got long in the first pullback, which is a very powerful pattern, and so far it's had a nice run out. I would keep an eye on this one and look to get long on the next pullback on that as far as a possible trade. My website, DaveLandry.com, it's based on traders education, obviously. And as I said earlier, I have over 500 posts last time I counted them up. And I do a weekly webinar, so if you just go to the scroll down, easy for me to say, on the home page, you'll see a little countdown. And every Thursday we do a show. We don't take ourselves too seriously. I often talk about trading psychology, money management, the methodology, and obviously I talk about where I'm finding opportunities in the market and what I think, where I think the market's going to head. So we have a lot of fun with the show. So if you are interested in that, join us each Thursday. The show is free. Bring your stock picks and your favorite stock picks and any questions you may have. Dress is casual. Make sure you drink plenty of fluids, and you know the other disclaimers. I think that's pretty much it. Great show. I'm always impressed with David's ability to attract such great talent to these shows. So, and I'm not sure why he has me host, but anyway, I appreciate that very much. Let me host the show this week, and thanks to everyone here. I'll let David you wrap it up and mention everybody's name and website one more time.
You're always a great host. I get lots of comments and messages and stuff about. If you haven't been on for a while, I get messages saying, "Where's Dave? When's he going to be back?"
Well, thank you. I appreciate that.
Okay. Well, yeah. Thanks, guys. Just want to remind everyone watching, you can go to Timing Research and download any past report there, or watch any of the past shows. Also, if you listen to podcasts, the shows the recordings are on SoundCloud now as podcasts, so you can check that out. And just want to next week's show is next Monday is a market holiday, so next week's show is going to be on Tuesday instead. And Anka Medcap, James Hermelli, and Matt Buckley will be back for that one. So just want to thank everyone again for this show. Neil Batho of TraderReview.com, Sam Bourgi of TradingGods.net, Roy Swanson of SteadyTrader.com, Eric Wilkinson of ProTraderStrategies.com, and of course Dave Landry of DaveLandry.com. Thanks guys.
Thank you guys. Thank you, David.
Thanks, guys.